Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Looking back at yesterday's action, we continue to see these tech stocks blow up, with the NASDAQ leading the way up 1.7%, the S&P was up 1%, and then the small caps just were left in the dust as the Russell was actually down 0.7. Now, for a number of weeks now, I've been talking about a new rotation back to the small caps. That's just not happening, but I continue to believe that we're going to have to see that for the markets to rotate and see some of the targets that I talked about in the live stream yesterday potentially going to the high 3,500, maybe even 3,600 basis the S&P 500. But today's action will be dominated by one thing and one thing only, and that's going to be Jerome Powell's speech and announcements that he's going to make about the economy and the Fed's strategy. I believe there could be some really shocking events. As I mentioned the other day, everything's been transparent, and I believe that's going to continue to be the case, but they may begin to throw caution to the wind as all of the central bankers are meeting. I believe that the message that we hear from Jerome Powell today will be a similar message that we hear from the virtual symposium, and this is likely to be a very positive event. Now, they may just throw caution to the wind and forget this 2% target on inflation. There may be some inflation talk or something that is going to trigger possibly the 10-year treasuries to start to move higher. I continue to believe even if that happens, the US dollar will remain relatively stable, and we're likely to see the metals and other areas heat up again over the next several days. In yesterday's live stream, I was able to talk about a lot of concepts that have been brewing in the background in my research. And one of them was watching for what I call the capacity trade, otherwise trying to figure out how much the economy will continue to come back and looking for metrics in different markets that are going to tell us what is actually going on with the economy as far as the capacity of the economy is coming back. And over the next several weeks, I'll be developing not only some metrics for us to watch, but also looking for areas for investment for us to rotate into so that we can participate in these events. The other trend that is emerging, and we already know about, is this movement from the cities into the burbs. A lot of this has already played out. We've seen Toll Brothers and a lot of other folks starting to change pricing, and we're seeing some housing inflation come in, but I still think this is the very beginnings of this movement. I think a lot of folks are going to be looking to get out of the cities, and the cities have a lot of financial issues to deal with, not just with the exodus. It's getting worse by the day. Ultimately, they may become somewhat of a ghost town to what we know today, and it depends on the city itself, how much stress they have financially as well as socially in the community, which is going to determine this exodus. So there's still a play there. I'm looking at that as well. And the final determination on this exodus will be looking at single-family housing versus multifamily housing. And this is going to be an area that I think is going to be really interesting. I will be researching this in the weeks to come. We'll start to build some models that will represent these ideas once we get them solidified, which should only take probably another week or so. We'll have those portfolios available to the WaveTech community. This will set up the potential for having baskets of stocks and strategies that will specifically play into the capacity and the movement to the burbs. The final thing I want to mention is we are seeing some negative rotation again in the short-term database. I'll go through that in details. I'll contrast the short-term database versus the intermediates in detail here in a few minutes. But be prepared that the statement from Jerome Powell, it could be the first time that maybe they're going to attempt some shock and awe because they know they have to keep the stimulus coming on. I will get on Twitter and comment on anything that I see if there's any substantial movement out of his comments tomorrow. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. Reviewing the WaveTech database, as I mentioned in the opening comments, we are seeing a negative rotation again. There are roughly 650 sell signals between models 1.2 and 3.2, with the bulk of them seeing sells in the 3.2 model, which is the model that is optimized to the most symbols. The liquidation that we're seeing in the database continues to be in these trades that have extended much further than the normal trades that is generated from the system. This liquidation is likely to continue. If we get below the 60 percentile range, we could begin a further movement down to 40%. Now, this does not mean that the market is going to roll over. It just means that the breadth of the market is going to start to thin even more. Right now it's at 63%, could drop into the 40 percentile range. This is in contrast to everything you hear in mainstream financial media, which is telling you the entire markets are being driven by 5 or 6 stocks. It's not true at all. There's a lot of stocks participating. There's still 10,400 stocks participating. As we review the intermediate database, now these symbols have a longevity of roughly 205 trading days. There's typically about 222 trading days in a year. So the holding period on these models are roughly about a year. With the 20% being realized, this suggests that we have another 160 plus days of holding period. The average returns on these trades that last for 205 days is 29.91%, and right now only 8.8% of that has been fulfilled. So 70% ahead of us on potential returns as well as holding periods. So this trend is still evolving on an intermediate level. In fact, it's at the beginning stages of the intermediate trend. This in itself tells us a lot about the character of the internals of the markets. As I mentioned, in the short term, we're seeing a rotation, and this will set up some range-bound trading and a lot of symbols until they consolidate, and then this cycle will take between 4 to 6 weeks before we'll be able to start another sharp acceleration. This has nothing to do with the relative returns or the movement in the indices that I will talk about here in a minute. Beginning with the S&P 500 futures, they're down 7 handles right now in the aftermarket, but we did rally after the cash about 5, so we're net down only 2. Basically, it's trading slightly lower, nothing material right now, but we did see a move down to the S1 number on the grid. 3471.50 is S1. We've seen a low of 3470.25. It's trying to bounce a little bit off of these levels. We're about 45 minutes to the London Open, and we'll see what type of activity we get, but my expectation is that we'll just grind this out until we see the comments and the presentation by Jerome Powell in the morning. So everybody's on hold until that happens. If we do take out the 7150, could see an S2 print be 3461. We're likely to get a kick up in volatility today, and we could see an S2 R2 number, which would print us all the way up to almost just short of 3500. So expect to see plenty of volatility today. The key numbers on the upside on the futures would be 3489, which would be R1. If we penetrate 3489, then the next numbers at 3498 to 3508. Now this is the futures markets. Looking at the cash market, we are also seeing that the projection for cash on a RXT number is 3503.48. Similar type action here. If we see a penetration of R1, 3484, we're likely to see continue move toward R2, R3. It will all be based upon what type of action we get. And on a live stream several weeks ago, we were live when Paul was talking, and I shared something with you that we learned long time ago on the trading floors, was when you get a reaction to the news. So let's say a positive or negative reaction to Paul's statement, you usually fade it for a trade. I won't be there to talk to you live on this, but I just want to bring this up, that typically you let the reaction happen and you buy into the reaction. If it's a negative reaction, you sell it. In the type of volatility levels that we see today, there's a really nice scalp trade there. It's not a long-term trade. It could end up setting up a reversal. Definitely there's an opportunity when these things happen. But from the cash market, we're likely to see a minimum of an S1, 3472 on the upside. minimum 34.84. I'm thinking S1, R2, and we could see that volatility expansion as I talked about in the futures. S2, which would be 34.66 to R2, 34.91. And it looks like we're going to challenge some of these numbers that I talked about in the live stream. If you didn't see the live stream, go back and watch that. I went through some substantial details. I had the opportunity there to really unpack what these objectives are and really dig deep into the technicals. So make sure you watch that. It's about the first 45 minutes. There's an awful lot of detail there. Expect to see kicked up volatility, S2, R2. We'll see what type of things they come out with and see if the shock and awe that I talked about actually materializes. One mention that did happen yesterday, which is potentially a negative or a sideways trigger for the next couple of days. RXT yesterday was 34.62.95, and there's a rule and there's a video on my channel called Understanding My Process. And if you look at using the market grid or comparing the market grid to Bollinger Bands, you can get some insight on how to use this. But one of the trades that is generated from here is if we close above the RXT number, which we did yesterday. RXT was 34.62. We had a high of 34.81. We closed 34.78. Typically what will happen is you'll get 1 to 3 days of a sideways movement. So there is some opportunity here, and it will tend to go down toward the S2, S3 number on the market grid for the next day. I'll put that back up here. So that would suggest 34.66, 34.59 on the downside if there's any reaction. That may be the extreme low for the day, setting up this scenario that I just talked about. Reviewing the NASDAQ futures, right now they're down 40 handles or 0.3% on the session. We are trading down into the market grid right now, just below S1, which is 11,941. The low is 11,934. The next level is 11,885. I don't think we get to that level. The NASDAQ has had such an expanded volatility range, and we also saw the same signal come out of the NASDAQ yesterday as we did on the S&P, where we closed above the RXT number, 11,902. We're looking at a close of 11,991. So we definitely printed above that number, which also suggests we could see some sideways to negative for 2 days. With all of the rhetoric that's going to be coming out of the Fed and the central bank joint statement on Friday, it's going to be interesting to see what type of movement we get here. And I mentioned in yesterday's video that the analysis over the next couple of days is going to be pretty tough in making a day-to-day call. But we're still saying these trends are very robust. PPM1 on this daily chart on the NASDAQ futures, PPM1 a plus 0.68, PPM2 0.54, and PPM3 0.38. Anything over 0.25 is a bullish trend or is a uptrend. And so we have uptrends on all 3 levels of the trend. Even on a short-term chart like this, there's 3 levels of trend that are evolving all the time. All 3 levels are confirming that we are in an uptrend. So the downside is limited. The absolute extreme support on this market is 11,471. That would be below the STX number. I don't see that happening or getting anywhere close to that. But we are likely to see some increased volatility. If we do get an S2, R2 number, we'll set up a crazy session, and it will all be about the close tomorrow, which I'll cover in tomorrow night's video. The final market to cover tonight is gold. Gold had a very nice day yesterday. We were able to print just below the 10-period moving average. That average is at 1961.10 yesterday. We saw the RXT numbers 1960.10. We saw a high of 63.40, so we did print above it, but we closed below it at 1952.5. But this pattern, this was definitely a reversal pattern. So in the overnight session, we printed up just 10 cents off yesterday's high, and we're seeing some selling coming in right now as we're trading down about 20 bucks off of that high. So there is some selling. It will be critical for gold to close above that 1952 level or have a higher close on a session. If we get that, that will confirm the upward reversal. Otherwise, if we don't get that, we're going to see further consolidation with the key level on the downside at 1927 as far as major support goes here. So the pivot numbers, 1927 on the downside, would set up a retest 1908 yesterday. The expected range for the next couple days is 1920 on the downside and around 1979 on the upside. I talked about that number yesterday. So continue to expect to see a consolidation here for a couple of days. PPMs are starting to set up a bottom, but there's still some downward pressure here, keeping the markets from moving higher. And as I discussed in last night's video, I don't see an explosion to these higher prices that I discussed, but I do see more stability and ultimately seeing markets start to move higher. If we see a statement from Jerome Powell today that indicates that they want inflation and they've got a strategy to bring it out, or this could also trigger gold to move over this key level. Right now it's at 1958 today. That 10 period moving average is still dropping about $3 a day. So it's not going to take much. We get a higher close today, we'll move toward that 1979 level and the possibility of moving to the higher end of the grid as we come into Thursday. This will complete the video. Thank you so much for watching. Thanks for showing up at the live stream yesterday. We'll talk to you tomorrow night.